The broadcast is now starting. All attendees are in listen-only mode.
Hi, everybody. We'll be getting underway in about 2 minutes. So just stay tuned, and we'll be ready to roll in just a moment. Ladies and gentlemen, we'll be starting in about 30 seconds. I got to let everybody get into the room, and we'll begin straight away. And here we go, ladies and gentlemen. Hello and welcome to today's session. I'm your host, Seth Julian. I'm the Chief Capital Markets Analyst here at BankSo. And we are going to have a walk through the trading platform. This platform is, in my estimation, and I don't say this as a biased analyst, is excellent, outstanding. One of the best platforms I've seen. One moment, please. There we go. Yes, one of the best platforms I've seen in many years. It's got a lot of things that very few other trading platforms have. Now, let me just say one thing. This is a trading platform. What this is designed to do is allow us to enter positions based on assets. So we choose an asset here, the euro dollar, and we can set our prices, our quantity of size of position, the stop loss, the take profits, etc., as opposed to a classical trading platform, charting program, which is more extensive, has is more visually, is richer visually, and has more optionality to it. But they're different products, and we're going to focus not on these types of programs, which, by the way, I do recommend you access and become familiar with. This, of course, is the famous TradingView program, which is the Rolls Royce of online charting programs. But we are going to focus on the trading platform that we supply you. All brokers have to supply their clients with a trading platform. After all, in order to participate in the market, you need to go through a broker. And BankSo, of course, is a broker in many markets. And therefore, in order to transact through us, you need to use our platform. That's what this is. So let's start by taking a generalized look at it. Excuse me. We have on the right the assets we can trade, and they are broken up into indices, forex, commodities, stocks, and crypto. Um, and we choose them simply by going to commodities. In this case, let's take a look at my favorite commodity, which is crude oil. And here's crude oil right there. And it shows us the chart of crude oil. And we can change the type of candle structure, or whether we want a line or a bar chart. I remain with candles, of course, but you can go to the old classic open, high, low, close bar chart, which has really fallen completely out of use over the years. I remember when candlesticks were introduced by a fellow named Steve Nissen in the early 1970s. It was quite a thing. These candlesticks, by the way, originated in the Tokyo rice market. Tokyo rice market's been in existence since the 1600s. And it's naturally evolved some tools that the West has acquired and in fact become quite enamored of. Now, let's take a look at the chart itself. You'll notice that there are different time frames: 1 minute, 5 minute, 30 minute, an hour. Notice that the chart changes when we change these perspectives. I like to refer to these perspectives or time intervals as resolution in a photographic or an optical sense. In other words, if you have a wide angle lens, you take a lot of data without much detail. When you have a telephoto lens, you narrow the data set, but you have much more detail. So this, in essence, is the singular most important feature of the technical toolbox. The ability to focus in and to focus out. This is without a doubt the most important feature on the chart in any charting. If you even go back to the trading view, this feature of time, and notice it's much richer. They've got minutes and some accounts, seconds, minutes, days. This is extraordinarily valuable to us as traders. And we must learn to use it. In fact, I would go so far as to give you one small piece of my experience over the years. One good way to give you a higher probability of success is to confirm a trend in 3 different time zones. So let's say we're trading crude and we're going to be doing it for an hour. Let's take a look at the hour chart. Hour chart, the trend is clearly up, although not with a great deal of power, but no, we don't have that. Just checking something. My mistake. I'll show you that later. So it's clearly up on the 1 hour trend. We'll take it a 4-hour trend. I would say it's well enough up to confirm. And we'll take a 30-minute trend. All fairly well up. The 30-minute a little weaker. And so what we see from this is that if we're looking to trade plus minus an hour, in the longer term, we've got confirmation that that's a good direction. In the shorter term, a little less so. So that would put into doubt a shorter term trade on oil. Now, if we were to change our perspective, and this feature is a matter of perspective from a time point of view, we see in the daily chart, prices have been declining. And on a daily chart, that means each bar represents 1 day. Just as if a 1 hour chart, each bar represents 1 hour. These are the intervals. These are the candle intervals. These are the amount of time that each candle measures. So I can set it up so each candle measures 1 minute. And here you can see it changes. It's highly volatile. So if we look at the daily chart, it's clearly in a downtrend. The 1 week chart is going nowhere. And the 4-hour chart is, it's got a slight uptick. My point is that given that perspective, there's no trade certainly in the longer term, 2 overnight, 1 day, 2 days in oil, but there is on the hourly. Hourly is creeping up. 30 minutes, it's slowly going up. And 4 hour, it's certainly in the last couple of days, it's slightly up. That gives you the confirmation in, say, the 1 hour times, because we looked at one interval to the smaller side, one interval to the larger side. I hope that's clear. By the way, ladies and gentlemen, I ask you to please post whatever questions you may have in the question and answer area. I will get to them as time unrolls. But meanwhile, feel free to ask any question you have in real time. I monitor that, and I will respond in kind as close as I can to real time. And I just want to say furthermore that we encourage the act of questioning. We don't denigrate or disparage anybody who asks a question. There are no dumb questions. The only dumb questions are the ones that are not asked. So please do not hesitate and feel free. And I promise you a respectable response. Excuse me. By the way, if I just like a quick confirmation, if all of you can hear me, just please register that in the question and answer. 1 or 2 responses will cover it fine, just to make sure that I'm not broadcasting out into the ether. And I will just check. Yes, it's my control panel indicates the same, but I'd appreciate a little feedback from you. And here fine, says PNR. Hey, good to see you again, PNR. You're a welcome member of the room. And Bruce and Irv, Sandy, Barbara. Okay, great. That's fine, folks. I get it. We all systems are go. That's beautiful. So let's get back to our trading platform. We've chosen the asset, and we would like to go long oil. In other words, we want to buy oil in anticipation of a price rise. All right. So we're going to one lot of oil is 1,000 barrels. A lot of oil. We're not going to take that. We're going to take maybe a 1/10 size, 100 barrels, 0.1, and each move is $10. That's a little bit more suited to us. I want to go long, so I press buy, and therefore my take profit is going to be above the price, and you see the take profit line lit. When I increase the profit level I want to go, I like to do it in price rather than pip. I want to take it up to about, let's call it 74.96. And I could do that simply by typing it in or pressing the plus sign. Let's say 74.95 to be round. And that means if it gets there, I'm going to make $94. And my stop loss, I think it might be able, let's see, this looks like a fairly safe range, 73.02. We'll call it 73. So that's our awful risk-reward ratio. We're risking 97 to make 98. That's not logical. That's not really a good idea. So let's lower the stop loss limit. So we've got a little more room, and we'll raise. Let's lower the stop loss to 72 even. $72, and we'll raise the take profit to 76. Now this is going to be perhaps a slightly longer trade. We're not sure, but at least, yeah. So we're risking 200 to make. That's still not so good. We're going to have to lower the stop again, I think. And we'll raise the. Okay, that looks like enough room to breathe, and enough room on both sides to breathe. And we're risking 120 to make 225. At least it's positive. Is that clear to everywhere? We're buying oil. Our margin is 147.85. It's relatively affordable. Each point is $10, and my risk-reward ratio is 180 to 225. I'm going to invest is the term we use for engage, and the order was filled exactly as we like. I must say that generally speaking, in fact, the vast majority of the time we get excellent fills on our servers. They're really up to date. They're really zippy. I've never really been jammed up entering a position. So that's how the stop loss and take profit functions work. You decide on your direction. You decide where you want to get out, if it's long or short, and you decide how much loss you're willing to take. And it marks where you entered the trade. And so you generally want your profit ability to exceed the amount of risk you're taking. Otherwise, you will lose as much as you gain over time, which is surely not a profitable way to trade. You want to be able to gain more than you venture. So that's the mechanics of the trade, and and it shows you the open positions immediately. Notice that you start off with a loss. Immediately, all trades in all brokerages and all markets start off with a slight loss because you have to pay the house first. The house gets paid, and once you've covered your expense, and those expenses are market fees that the market itself charges for transacting. Oil is traded on the COMEX exchange the NYMEX exchange in New York, and there are fees. There's insurance. There's market exercise fees. We have risks that we have to undertake in order to provide the liquidity for these positions that have to be financed. And so you start off having to make up your loss. We're already making up the loss. It'll go away if we're right. And once it heads into the profitable area, we're in business. Now, let me show you a few of the features up here. Free margin means how much capital do I have available in my account to deploy. Used funds means how much have I put away, have I used how much is in the market at the moment. This being the only position I have in the market, its margin is my used funds. If I had multiple positions, I would have the sum of those margins, and the equity is the value of the account, the free margin plus profit and loss. The margin level shows me what percentage of my account is in the market, and you can see that is to say what percentage of my account is free to deploy, and you want this above 100% at all times. This is quite healthy. And interest rate refers to positions held overnight that I have to pay for, particularly short positions. And you'll see that sometimes when you hold, all the time when you hold overnight positions. It's part of doing business. You have to pay to ensure that your position will be maintained overnight. And there's risk in that. And we have to be reimbursed for the risk we take, providing that overnight liquidity. That's the top line figures. I want to make you aware of this extraordinarily, I have to do this periodically. I just have to refresh the screen. I want to show you this feature because it's extraordinarily powerful. Under the calendar function, let me just show you the oil position. There you go. It's still under calendar. You will see these two tabs: technical views, economic insights. The economic insights are merely the economic calendar in real time. Today, what's coming up, what's going on, divided, and this is completely inclusive. This is utterly comprehensive, and therefore contains things that may or may not interest you. It's not particularly, you can filter it. You can filter it to see the high, medium, and low impact events. You can filter it to show you different locales, different countries only. For example, if we only see the United States, we would only see U.S. Events of high impact nature. And so we see today that there's nothing of high impact nature today happening in the U.S. So that's the economic calendar. I use mostly Forex Factory. I find this to be more flexible to my preferences, but there's also the investing.com economic calendar. There are many of them, but we do provide with some of it here. This technical views is a gold mine, ladies and gentlemen, a veritable gold mine of information. These are signals provided by an outfit called Trading Central. Highly reliable, well researched, and very well documented positions that they recommend. Now, let me just say something about signals in general. I'm fond of former President Ronald Reagan's phrase that he applied to the Russians, the Soviets, I should say, at the time, where he said, trust but verify. Take what the Soviets say seriously, but verify it. I maintain the same caveat in all signals, be they mine or Trading Central's or your barbers or your uncles or your brokers. Trust but verify. And that means literally just what it says. So if we take a look at euro dollar, oh, do they say anything about crude? Oh, maybe they do. Commodities. Yes. Notice the categorization: forex, crypto, the indices, and commodities. So here we see they have a quote here at 1 o'clock a couple hours ago for Brent. Says it's going up. Do they have gas? Oh, here's crude oil. By the way, there are two crude oils in the world. There's West Texas Intermediary, WTI, commonly, and it's here listed as WTI. West Texas Intermediary, it simply means the U.S. blend versus the Brent blend, which, and I won't go into we'll go into detail more about crude oil when we have the live trading event on the crude oil inventory report. But suffice to say, we're going to take a look at crude because that's what we're trading. They look at it as going up, just as I did. We see a graph. They tell you long positions with targets at 74, 75, below 72.80, 72.40, 72 even. RSI, that's the relative strength index, a technical indicator, which we may talk about in a session we have about technical indicators, is bullish, meaning it's indicating an upward slope. All good. We get a little confirmation for our own beliefs, and so we get some confirmation of what we're thinking. Of course, it's going against us exactly in this moment, but that's why we have our stops. We gave it some room to breathe. The market has a lot of noise in it. There's randomity. In other words, you enter expecting it to go up. You set your loss. You set your profit position that you want to take it when you leave. You set your loss, but it's going to move on its own in a noisy way, meaning in a statistically insignificant way. The movement is just random noise. And you've got to allow for that. If you set your stops too tight, you'll be stopped out for no reason other than random noise, and it'll be a very frustrating experience. You need to give some room for these positions to breathe up and down, and therefore you must gird yourself for the fear and the anxiety that comes with a loss. We'll talk about the psychology of market trading in another session. But suffice to say that you need to be able to withstand negative movement against your position, despite the fact that it may work out well. You have to take a deep breath and let it breathe and realize that you may lose money for a bit until it starts to positively show money. And you may not make money at all. You may get stopped out, which is the purpose of the stop. You don't want to set them too close, but on the other hand, you don't want to set them too far. You don't want to lose money unnecessarily. And so limiting your risk is a crucial risk management tool. And we allow that quite simply in these stock profits and take loss. In fact, I'll even show you something else. If I want to change my stop loss for fear of being stopped out, I can do so after the trade. If I want to increase the stop loss, submit changes, I've now extended the stop after the fact. And I can do so also with the take profit. If I would like to increase the take profit, let's call it 77. Submit changes. A highly flexible system, ladies and gentlemen. This system is not inflexible, it's flexible. It gives you the chance to change your positions, gives you the chance to alter your stops. Very, very useful. You want to learn about trading. What is the nature of this particular contract? Oil is traded in the futures market, therefore it's a futures contract. It shows you the currency in which the asset is based. Remember, all assets are not absolute. They're the asset denominated in another asset. In the case of oil, it's oil denominated in U.S. dollars, that's just the nature of that. It's got a currency equivalent, dollars per barrel, or dollars per troy ounce of gold. But the unit on the left side is always got an exponent of one barrel, 1 troy ounce, 1 bushel, or 1 euro. And the right-hand currency, the moving feature, the rate currency, there's the base currency on the left and the rate currency on the right. That one fluctuates with the movement on the y-axis, the vertical axis of the chart. That is the exponent of that is the actual moving value on the chart. Quote, the oil contract rolls over every month. There's a monthly oil contract, so you don't really need to consider it. The leverage, you only have to put up, it's got a 50-to-1 leverage, so it's got all commodities are nicely leveraged that way. The markets are designed to feature that. Opening times of the market, the value of each tick, et cetera, the cost for the swaps if you're buying and you're selling, and the required margin for one lot. We paid 148 because we took a tenth of a lot. Clear, ladies and gentlemen? All right, that's the information, the trading chart. We also have trade history. You can always see your trading history. If you want to see all of it, you can see all your different trades that you've logged into, what's profitable, these are closed trades. You can see the last 3 months, month, whatever, and you can export these reports to if you keep a journal, which I highly recommend, and we'll go into these aspects of trading as time unfolds, how to keep a journal, how to keep records. As Dr. Elder has famously said, I'm an accolade of Dr. Alexander Elder's, and I recommend you to read books by him as well. His first book is called Trading for a Living, an excellent place to start and learn the trading business. He always used to say, show me a trader that keeps good records, I'll show you a good trader. And so this system allows you to keep those good records. That's important as well. You take a snapshot of this if you want. Many people in their journals, they take snapshots of the screen, they put it in the journal, and then they're able to look back historically and say, why did I get into this trade? What motivated me? What was I thinking? Why did I get in? If it's a loss, they're able to say, what did I do wrong? What can I avoid so this doesn't happen again? Good traders, all good traders lose. Don't be, concerned that you're losing. Well, I lose plenty. Nobody can win without losing. There's no endeavor in the world where success is universal and failure is non-existent. It doesn't happen. In fact, the more successful people have more losses, whether it's in sports, business, arts, professions, trading. Nobody makes money without losing money. Rest assured, we all lose money. But the sine qua non of success in our business is to make more money than you lose. And if you can take more money out of the market than you put in, you're a success. And so one of the keys to being able to achieve that long term is to understand your thinking when you went in, your mood, your psychology, and you'll start to see patterns. When you're feeling high, energetic, positive, I find that my trades are more successful. When I've had a spat with the wife, or the kids are making me mental, or my boss is driving me nuts and I'm agitated, or I haven't worked out and I'm feeling crummy, that you want to monitor that. You want to see those things over time, and journalizing will help you with that. That's another subject. We'll get to that in another session. So we're coming in on a half hour. Let's take some questions from the floor. Let's feel open. Feel free to ask questions. Oh yes, we have this feature which is cute. This makes me nuts. I don't like the dark so much. I like the light, but that's useful. There is. I just do want to point out that there is we have a very wide selection of assets to choose from the utterly exotic to the meat and potatoes, and that be it. In stocks, I just also want to point out that if you're a stock trader, we have stocks in an absolutely huge and varied portfolio. Literally hundreds and hundreds of stocks from all over the world. You can choose the ones you're interested, follow them, learn them, trade them, invest in them. You can buy them and hold them, but be aware that we have you're very well endowed in the stock world here. Commodities as well. We've got many of the metals, aluminum, zinc, of course, and silver and gold and copper. We've got the platinum group. We've got palladium and platinum. We have several energies. We've got natural gas. We've, of course, got the WTI, which is what we're treating, and the Brent, as well as refined products. We've got gasoline, RBOB gasoline, which is refined blend reoxygenated formula for, well, this is called RBOB. I won't go into that for the moment, as well as heating oil, which is also known as bunker fuel and is used to power marine vessels. And the softs, we've got coffee, sugar, cotton, and cocoa. And the field crops, corn and wheat, live cattle, orange juice, and soy. Tremendous selection. And why is this important? Because not all assets are moving at any given time. So you want a wide stable of possibilities so that you can access them. Now, Barbara asks the question, how accurate are the prices on this screen? It's an excellent question, Barbara, and I'll tell you the short answer. Perfectly accurate. And I'll tell you why. At the end of the day, you take the prices on the platform that your broker is presenting to you. There's always slight variation due to latency, due to this, due to that. You'll often find that slight price difference. Forget it. It's trivial. Don't let that worry you. You take the prices that your broker offers you because that's the market you're transacting in. So this chart is the absolute truth for you, Barbara, because it's your broker. You're trading by your broker. This is your broker's account. These are the real things. Have I answered your question, ma'am? Good. I'm glad. Any other questions, ladies and gentlemen? The indices, let me just say, extraordinarily generous. Australia, Spain, the CAC 40 in France, the Hang Seng, the Hong Kong, the Shanghai, the Nifty 50 from India, the USD ICE, I believe, is that's the dollar index. Excuse me, that's not a stock. It's listed in indexes, but the dollar index is an index of the strength of the US dollar, not stock. The JSE is the Johannesburg, the AS Australia, the Russell 2000. Fabulous index. Let me see that just JSE is, make sure I didn't make a mistake. That's, yeah, it's Johannesburg. The DAX in Germany, the Dow Jones Industrial, the Nikkei 225, the FTSE in Britain, the Taiwan, the Hang Seng, the Chinese is the Shanghai, Tadawul in Riyadh, and the TA35 is the Tel Aviv 35. A tremendous selection of indices. And remember what these indices are. You're taking positions on the economy writ large in the different markets. So if you believe that the U.S. stock market is strong, instead of in buying individual stocks, you could buy the indexes, and you're buying, in essence, the whole economy up or down. And oh yes, and just let me tell you, the favorites are ones that I choose. So I may find that if I go into commodities and I'm trading oil, where is crude oil, and I mark that with a little blue star, it'll appear in my favorites. There's crude oil. That's how favorites work. It's a very useful little device. The daily ratings is a fascinating feature of Tip Ranks, another terrific tool I want to point out to you. Tip Ranks rates the different assets, or rates the choices by different analysts for different assets. So if I want to see euro dollar and daily ratings for euro dollar, I see analysts who tell me what their oh no, I'm sorry. This is only for stocks. This is my mistake. I can see daily ratings for different stocks. So recommendation type, upside down action, market cap. Where do I find the the stock I'm maintained 15 hours ago? I'm not sure about this. I'll have to get back to you. If anybody knows exactly how the analyst ratings for the stock, if I go into the stocks, let's say, and I take Abbott Pharmaceutical, oh, I don't know why I picked 3M. That's good enough. And then I take the here it is, analyst ratings. There you go. You pick it on, you get the stock, and then you get the analyst rating for it. I was a little confused there. This gives you a wide selection of analysts and what their position is. It's mostly a hold. So most analysts are saying 7 out of the 8 say hold it. That's an indicator, and this gives you the projected price, stock price. So that is a very valuable tool. And trending stocks just gives you stocks that are on the move, up or down. Very, very valuable in the stock picking world. So, ladies and gentlemen, PNR asks, are there assets that are not available from Bankso but are traded on other platforms? Oh yeah, sure. The world is filled with assets. If you want to trade latex, for example, latex trades in Jakarta. The palm oil contract trades in Jakarta and Tokyo. You can. The iron ore trades in Singapore, I believe. If I'm not, don't quote me on that. Yeah, sure. There's thousands and thousands, but at the end of the day, you trade with what your broker offers you. And if you want something, you talk to your broker and say, well, I'd like to trade latex in Jakarta. And it's possible, though I don't say what that probability is, but it's possible the broker says, okay, we'll see what we can do to get it for you. Did I answer your question, PNR? Yes, there are surely other. Great. Excellent. All right, ladies and gentlemen, with that, it's 35 minutes into the program. I'm going to bring the session to an end. If there are no further questions, let me just say on behalf of the staff and the management here at Bankso, we're always humbled and gratified by your continued patronage of us as your online broker. We seek to do the best we can for you. Now, we don't always win. We're not always right, but we do the best we can. And this session, I hope, is an exemplar of that effort. And with that, ladies and gentlemen, I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Bye-bye for now. My pleasure, PNR. Thank you for joining us. Bye, Barbara. Yeah.